Hello, Ric Komarek, Certified Financial Planner, and today I'm going to be sharing with you an article that I loaded to my blog page titled A Taxing Time, 7 Ideas to Ease the Tax Burden. So let's take a look at this. Taxes, you can't avoid them, but you can make the annual ritual a little less taxing, should we say, with proper planning and preparation, and you may be able to reduce this year's burden as well. So I'll offer a few details on that. Number 1 of 7, record keeping. Come January, you'll be receiving your W-2s, 1099s, 1098s, your list of donations, so on and so forth. And it can be a little overwhelming, so decide where you're going to store those documents as you receive them and put them in that exact same location as each new one arrives. Then they'll all be together, all in the same place when you're ready to do your taxes. Number 2, changes in marital status and withholdings. Whether you're getting married or going through a divorce, a change in marital status can have significant impact on your tax liability. And I would say a very significant impact. You may need to complete a new W-4 with your employer, or if you're self-employed, you may need to adjust your withholdings for your quarterly payments. If possible, it's best to avoid the need to write a big check to the IRS that triggers an underpayment penalty. While some folks enjoy getting a big refund each year in April, the cost is that you're giving up that money during the interim. Point number 3 is maximize retirement contributions. And I did another video showing what the maximum contributions you can do in the year 2019. So take a look at that video. If you participate in an employer-sponsored plan, contribute the maximum amount, and at least the bare minimum, go ahead and maximize the employer match, because if you miss out on that, you're just giving up free money at that point. Number 4, charitable donations. The standard deduction has been raised and fewer folks will benefit from itemizing, yet many of us still want to make our charitable donations to church, charity, and otherwise. So go ahead and make those. If the value of a non-cash donation exceeds $500, you'll be required to complete Form 8283. Number 5 of 7 is healthcare coverage. Tax reform eliminated the penalty for failing to have health insurance, but the individual shared responsibility provision was eliminated for the tax year 2019. If you or your family members do not have the minimum essential coverage, you may be subject for a penalty in 2018 when you file for that. Most taxpayers will check a box indicating that they have the coverage. Number 6 is health savings account. If you're eligible for a health savings account, this is one of the best accounts that you can have. And as a family, you can contribute up to $6,900, or on an individual self-only basis, $3,450. So if you have that, definitely take advantage of that. It'll lower your taxable income. And finally, number 7, gift taxes. If you are giving gifts this year, if so, be aware that anything over $15,000 in a gift requires the filing of a gift tax return. That doesn't necessarily mean that you'll have to pay a gift tax, but you do have to file that gift tax return if you give a gift in excess of that. If you have any questions about this, your retirement, taxes, insurance, investments, feel free to reach out to me. That's what I'm here for.